Hello, if you're just joining us, if you'd like to rename of your name on your, where on Zoom, where your picture is, and just like to put just your first name and your organization, that would certainly help us in a discussion later on.
Okay.
If you need some help doing that, let me know. Again, thanks for joining us early. If you'd like to change your name on your Zoom image to your first name and the organization, that would be fantastic. Sort of as an introduction, so that when we go into discussion at the end of Kevin's presentation, we'll know who you're with. Hey, Brianne, thanks for joining us.
No problem.
We really appreciate you taking the time. I think you'll get a lot out of this. I always learn a lot in sort of these sort of sessions, so I hope everyone does get something out of it today.
Yeah, I'm thinking the more I know, the better. We just had some reorganization in the city, so it's going to be interesting to see how everything turns out and see what I have to take over.
That's always a challenge. Good luck. Just a question to all of you. Did you all receive the reminder email? Just want to make sure it's working correctly. Or did you just remember on your own?
Both.
Both. Okay, great. Excellent. We still have a few more minutes according to my clock, so we'll just hang out here a bit. Hello, Sarah. If you'd like to change your name just so that it just shows your first name and your organization, so that when we get into the discussion part, we'll know what organization you're with, that would be great. You're also free to type in your organization in the chat box too. Hello, if you're just joining us and you'd like to go on to Zoom and go into the little blue upper right-hand corner where your name appears, shorten your name to just your first name and the organization that you're with. That would be really helpful. So we all know what organization you belong with. That'd be great. Or you can just type it in the chat as well. That works best for you. Hello, if you're just joining us and you'd like to change your name so that it just shows your first name and the organization that you're with, that might help us all to know what repository or museum you are with. If that doesn't work, you can also put that in the chat box as well. Great, we're going to get started here in about 1 minute. Those of you who are joining us and could make a change in your Zoom account so that it just shows your first name and the organization that you're with, that would be very helpful, particularly when we get to the Q&A part after Kevin's presentation. If that doesn't work for you and you'd like to just put that in the chat box, you can also do that as well. Okay, I'm going to go ahead and get started. For those of you who don't know who I am, I'm Todd McMahon. I'm the State Curation Coordinator with History Colorado. And I'm going to get started today with a couple of housekeeping items as well as land acknowledgement, which here we History Colorado. So in the spirit of healing and education, we acknowledge the 48 contemporary tribes ties to the state of Colorado. These tribes are our partners. We dealt with them when we plan exhibits, collect, preserve, and interpret artifacts, do archaeological work, and create educational programs. We recognize these indigenous peoples as the original inhabitants of this land. Again, thank you all for joining us. And again, if you'd like to just shorten your name on the Zoom account so that we just have your first name and what organization you're with, that would be great. For the most part, we'll try to keep all of our questions or answer all of our questions at the end. We're going to have hopefully some ample time for Kevin to answer questions that you all have regarding insurance. A couple other items of note. I've sort of changed a little bit how the Confab works this year or this season, if you will, and made it a little bit more kind of webinar-like. And I hope you like that kind of format or like this format. We won't be doing any breakout rooms or anything like that necessarily, although I'm really open to having discussions throughout the year if you'd like. So just let me know if you have a topic that you'd all like to discuss. I'll be happy to try to schedule that. So we have Kevin speaking here in a moment. I wanted to let you know that on March 18th, we'll have Will Gregg from the University of Colorado Museum talk about the Earl Morris collection and about archive use. So I'll have an invite probably sent out next month on that. So be sure to try to join us for that. There's fantastic images, photographs that Will has come across in his project, looking at the Earl Morris collection, and should be a very informative talk about some of his trials, tribulations, dealing with archives that are often associated with artifacts. So look for that. I don't have an exact date yet set, but we've got Kimberly Nowal from History Colorado speaking to us about their community lending program. So that'll be in June. And I'm hopefully going to have someone from CU Boulder talk about the Yellow Jacket site sometime probably in August. That's what we've kind of got scheduled for this year. But again, we may interject some other things or other discussions as the need arises. So again, let me know how you like the format. You know, part of our responsibility here, I think, is to inform all of our repository partners about ways to do collections care and issues that are associated with that. And so we're hopefully providing them a little bit with this, this forum and this format. Before we get started, I'd like to first introduce our speaker today. Kevin Sullivan is, of course, an insurance agent with associated with the National Trust Insurance, the National Trust for Historic Preservation, and he has often helped a lot of house museums, historic theaters, historical societies, and preservation organizations find insurance for their needs across the country. So we're really thankful for Kevin to provide us with his time and expertise today. Like I said, we're going to go into the presentation. So this is pretty much going to be like a webinar part. And then we'll have questions and answers afterwards. And I think that was all that I wanted to cover before we get going. Although before we start with Kevin, I do have kind of an interactive part, and this will also sort of help, I think, Kevin in framing his presentation to you. I do have some polls I wanted to launch and have you try first. And so we have kind of an idea of what your understanding is of insurance needs with. I'm going to launch this first question, this first polling question, which is how familiar are you with insurance coverage for your repository? So just a kind of simple yes or no. Are you still trying to figure it out?
Yeah.
All right, I think everybody has voted. So here are the results. We have about 41% of us says that they're familiar with insurance coverage for your repository. 12% no, not really familiar. And looks like a slight majority of folks who said they're still trying to figure it out. So we hope that this presentation will help with that. All right. So I'm going to now also ask you another question, which, who makes your insurance policy decision? Is it you? Is it somebody else, an administrator or manager in your repository, or it's really beyond my control? It's just way above my pay grade. So if you could take a moment to let us know about that. Like almost everyone has voted. Okay. So the results of this are that it's kind of beyond my control. 65% of you say that. And it's in the hands of another museum repository administrator, perhaps if you have a registrar or someone else who manages that. So about 35% of you. Very few of you individually deal with it. So I think that's also important to hear. We've got two more questions for you. And probably as a result of this last question, do you currently buy insurance for your collection? I'm going to guess that we're going to have a majority of folks saying no, but actually a couple of people are saying, at least one or two people are saying they do. Okay, almost everybody's voted. Okay, so I'm going to stop that and share those results with you. So a few folks actually are buying insurance, so also good to know. And then finally, what type of repository are you associated with in terms of funded status for your repository? Your university funded repository, your city funded repository, county funded, federally funded, or you're purely a nonprofit entity? Again, the last question we have. Almost all of you have voted. Just a few more seconds here. I'd like to get onto the poll. All right, so looks like we've got about 38% of you are the repository. 31% are city funded repositories. 6% are county funded. And about 25% of you are purely nonprofit funded repositories. So thank you very much for taking part in those polls. I'm sure that helps Kevin in trying to frame his presentation to you. So with that, why don't we go ahead and have Kevin take it away. Thank you.
Sure. Hey, everybody. Thanks for having me. As Todd had mentioned, you know, I do have a kind of a brief presentation about who we are, what we do, and then some things to think about. But in general, I like these to be more question and answer because you probably came here for a reason, and I want to make sure we address that reason. So I'm going to go through the slides, but I'm going to do it pretty quickly, just in the sense that we allow some time towards the end to answer specific questions you have. So if I'm going too fast, I can always go back. So anyway, let me control the screen here. All right, I'm assuming you can see my screen. If not, let me know. As Todd had mentioned, I'm with National Trust Insurance. We're the insurance subsidiary of the National Trust for Historic Preservation. We were created about 15 years ago to be essentially a specialized insurance agency that works with the owners and stewards of historic structures. So we work all over the country. I'm based in Baltimore, but I have clients all over. I have plenty of clients in Colorado and certainly all over the country. We work with all types of historical societies and house museums and historic theaters and, you know, really anybody that owns a historic building or operates out of a historic building would be the case. That last polling question I thought was interesting because, you know, that helps me frame who I'm talking to. Oftentimes, when you're a pure nonprofit, you might own the historic building, but if you're a county or city-run organization, you know, the municipality might own the building, and you're just kind of operating outside of it or inside of it. So I think I have a good idea with whom I'm speaking. So I might skip a couple slides that I think might not be truly applicable. But when we talk about insurance, frankly, you know, it's the topic of risk management. And one of the first questions I often get is, you know, what is risk management? Insurance is transferring risk, right? So when you think about risk, it could be like a restaurant that is deciding whether to serve alcohol, right? And there's risk associated with serving alcohol. You can avoid that risk, right? You don't serve the alcohol, you're never going to get stuck in any bad situations. you can retain that risk. You could just say, all right, we're going to sell alcohol and whatever happens, happens. Or you could transfer the risk. And the idea of transferring the risk to another entity is contractual risk transfer. You can transfer to an insurance company, right? You can hire an insurance company to take on your liquor liability, or you can do contractual risk transfer. You can transfer that risk to another outside entity. We're going to cover both those topics today, insurance and then contractual. Within the context of insurance, frankly, there's two broad types of insurance. There's property insurance and then there's liability insurance. Property insurance focuses on your tangible stuff, right? Your buildings, your contents, your fine art collection, things that you can touch and feel are typically your property insurance. Liability refers to your operational risk, negligence that your organization might have to a third party. It could be someone who's injured as a result of your operations. They slip and fall within your museum. It could be a directors and officers risk. You're a nonprofit, you have a nonprofit board, and you make some bad decisions as a board, and you know, you don't use money the proper way. So there's liability. We're going to cover both of those, starting with property. So within the context of property insurance, you know, oftentimes when I'm doing this presentation, I'm talking to purely nonprofits, right? People that do own their building. This is a little unique for me because I do sense that there's a large portion of this call where you don't particularly maybe own the building. The city owns the building, the county owns the building, the university owns the building. When you look at your property insurance, there's typically four things that are covered: your building, your contents, your business income, your loss of income tied to that building, and then your collection. When you look at your collection, let's start with the building. When your building is damaged, you fix the damage, right? It's known as a replacement cost. You can, hire a contractor. You've got a building, 80% of it is damaged by a fire, 20% of it is undamaged. You have to hire a contractor to go out and fix it as if nothing ever happened. In theory, any building, including a historic building, can be replaced. The materials, can be sourced. When you're looking at fine art and collections, they can't be replaced. If you have a one-of-a-kind painting or a one-of-a-kind artifact, oftentimes there is no replacement. So fine arts are based upon the market value. What was the value of that item before it was damaged? And everything has a value, even if it's one of a kind. You look at like Antique Roadshow, for instance. You watch that show, which I actually kind of like. You have the most unique things, and they all have a value tied to them. But the question typically is, once you have damage, you buy insurance for a reason. You buy property insurance for a reason. Well, how's the carrier, the insurance carrier, going to make you whole after a claim? This is called the valuation clause, and it's in every single insurance policy. It basically spells out, within the context. Let's just take building insurance as an example for the context of this conversation. You have damage to your building, a fire, for instance. How's the insurance carrier going to make you whole? They're going to help you fix your damage, right? But not all insurance policies are created equal. Some, meaning the very best in our world, will allow you to use what's called historic replacement cost. They're going to allow you to use those same historic materials, architectural features. They'll allow you, the nonprofit, or you, the organization, to source those unique aspects and hire those artists and contractors. Essentially, it costs more, but it's available and it's out there. It's called historic replacement cost. A step below that is what's known as
Hey, Kevin, I don't know if you're still on, but I'm having a hard time hearing you. So how about everybody else?
Can't hear.
Can't
Can't
hear.
hear either.
Kevin, I think you're muted, so let me try unmuting you. Try speaking now, Kevin. We're still having problems. Hey, Kevin, maybe you can try. Is your phone working? Is your cell phone working? Okay. Kevin, I wonder if you can try phoning in by chance. Hey, Kevin. Apparently he can't hear me either, unfortunately. Okay, I think you got the message. Apologize, all of you out there. Hey, Kevin, do you want to try calling in instead? I know you said you had your cell phone there too. Okay. Well, while we're working on that, is there any questions that anybody would like to pose at this point in time? All right, hold on. We'll try.
I think you can hear me now,
You
hopefully.
can. Yes.
I didn't touch my computer. I didn't touch my phone. I have no idea what happened. So I'm sorry. But I just called in from a landline. Let me share my screen again. I apologize. Don't know why that happened. I'm assuming you can see my screen now.
Yes.
Okay. We'll keep trying. So sorry about that, everybody. I'm going to move on to talking about fine art. So I don't know where we left off within the context of property insurance, right? You got your building insurance, contents, business income, and then fine art. I know one of the big topics of conversation in talking with Todd leading up to this call was in relation to the fine art. So I'm going to try to focus on that as much as I can. Your fine art can be insured one of two ways. So you look at a modern art museum, the value of the art that they have on the wall can vary greatly, right? You can have paintings insured or valued at millions of dollars. But when you look at house museums, historical societies, typically what you find are antiquities and collections that it's a lot of historic artifacts, but not necessarily any singular high value items. You know, occasionally you could have something like Abraham Lincoln's hat or some sort of historical artifact that's valued at a lot of money. But generally what we find is what we'll call bric-a-brac, which is just standard, antiquities. So when you're looking to insure your fine art, one of the things that your insurance carrier is going to want to know is, well, what's the sum of your collection and how do you reach that value? Most insurance policies are valued at market value. So if you did have a collection and it was damaged from a flood, a fire, what have you, the insurance carrier is going to pay you based upon the market value of those items at the time of damage. So it's important that you have a schedule or an appraisal of some kind, so you can prove to the insurance carrier what you had and what was damaged. And then to the extent you can document anything about the item, whether it be pictures, again, or an appraisal, it'll help adjust your claim. So most commonly you'll find market value as the means to insure your collection. Now, if you have an item in your collection that is, of high value, and high value varies, depends on who you're talking to. High value to you could be $5,000, or it could be $25,000 or $100,000. But anytime you have a high value item, you want to have an agreement with the insurance carrier prior to the claim, prior to basically issuing the policy, that, hey, we've got these scheduled items. We think that they're valued at $10,000, let's say. And an insurance carrier will issue what's called an agreed value, which is basically they're agreeing to the value of the item before the policy is issued. So if there wasn't ever a claim, they would pay you that agreed amount. Typically, for an insurance carrier to do that, there needs to be some sort of substantiation to the value, right? You can't just say, hey, I want to insure this pencil for $100,000, and the carrier says, okay. There needs to be some sort of agreement as to why you established that limit. Let's skip that. So when you look at your insurance limits, this is the other thing that we often get brought into quite a bit. Now, most commonly, we're brought into when it's about historic building insurance. You take a modern day townhome, for instance. Most insurance companies know how to value those. They might say, frame construction, what have you. I keep seeing the chat feature. Sorry, I keep seeing the chat feature. Now I'm paranoid that you can't hear me, but I think you can hear me. When you look at the values of a historic building, most commonly you're going to find that no two historic buildings are the same, and then to repair a historic building, it's quite expensive. So nailing down the limits for a building is very important. Typically, a historic museum should be insured for no less than about $150 a square foot. But most commonly, you'll find that historic buildings should be insured at $200, $300, $400 a square foot. And there's appraisals out there. I could direct you to a proper source. But if you wanted to figure out what a proper building limit for your historic building would be, the best way to go about doing it would be get a replacement cost appraisal. And an insurance agent should be able to help you there. When it comes to establishing a limit for fine arts, there's a whole set of other appraisals that you might want to consider. If you have a collection that's large enough, there are fine art appraisers out there all over the country, depending on I'm sure there are probably many out of Denver, to be honest. And they would come out, they would make an assessment of your collection and establish a value, which would be helpful. Within the context of fine art insurance, let's say you had a collection. Your collection, however you determined it, was a $2 million collection of fine art antiquities. Most fine art policies are only going to provide coverage for those items while they're at your premise, while they're at your building. But as you know, fine arts travel. You either take items on loan from other institutions, or you loan items to other institutions. So at some point, those items are usually in transit, meaning essentially being shipped or on the road, or they're off premise or in an unnamed location, meaning your building, your museum is at 123 Main Street, and you've now loaned this item to an institution across the state. It's now off premise. You want to make sure your fine arts policy has coverage for both items in transit and off premise. Also, there's typically considerations for what we call CAT or catastrophic perils. You know, all over the country, you might find flood and earthquake. I know for a fact in Colorado, the big issue is hail, wind and hail. So you might find that your policy has either an exclusion for wind and hail or a sublimit for wind and hail, a smaller limit for wind and hail. But those are all things you want to consider. And then lastly, if you don't have an appraisal, it's possible your insurance carrier, fine arts carrier, will establish a max per item, a max limit per item. And if that's the case, you just want to make sure that max limit per item is as such that you don't have any of your high value items that are valued at greater. I'm going to skip the property claim scenario because I think we're want to make sure we have enough time. Here we are at 3:30. Okay, so moving on to, that's your property insurance. That's your stuff, right? Now, as an organization, you should also be focused on liability. If you are certainly a nonprofit running, a house, museum, historical society, this is very applicable to you. But even if you are a county or city-run organization, elements of this are applicable to you as well. Even though, the municipality probably procures the liability insurance, the concepts that we're going to talk about, I think, are important to understand. So we're going to talk about the types of coverages that are in place, appropriate limits, and then, quite frankly, the biggest expense, which is your legal bills. So most commonly, every organization should have a general liability policy. General liability provides coverage for third-party bodily injury or third-party property damage. In essence, it's slips, trips, falls. People get hurt at your facility. You're operating a museum, you're operating a historical society, you're operating a historic hotel, a historic theater. You're inviting people into your doors, people could get hurt. When people are hurt, they tend to sue, right? General liability protects against that. It provides coverage for all causes of loss, all types of injuries, except for the things that are excluded. And then, commonly you'll find general liability exclusions like pollution liability would be, a common one. But for generally speaking, your general liability policy will provide you coverage for everything that could happen. An umbrella liability policy is an extension of that general liability policy, meaning your base general liability policy, which might provide $1 million of limits, isn't enough because you're a large institution or you have deep pockets. You might say, we want higher limits. An umbrella policy provides those higher limits. For example, if you had $1 million general liability policy, you could buy a $5 million umbrella policy, which would give you $6 million in total liability limits. So your general and your umbrella policy do provide coverage if someone's hurt, someone's physically hurt. But oftentimes, if you're a nonprofit, you should consider buying directors and officers liability. D&O insurance really has nothing to do if someone's hurt as a result of your premise. Directors and officers insurance basically has to do with poor decision-making by the board. So, you're raising money to put a new roof on your house museum. So you do a capital campaign and you raise $500,000 and you're getting ready to replace the roof, and just then a water pipe bursts inside the building and floods the basement. So the board decides, well, we're not going to use this $500,000 to fix the roof anymore. We're going to fix the basement. Well, while that sounds good in theory, and in reality it could be fine, you might have donors that gave you money for a specific purpose to replace the roof, and they're not happy that you changed the funding mechanism and you fixed the basement. So things like that often happen in a D&O claim scenario. And it's important, I think, for all nonprofits to consider buying a directors and officers policy. Other types of considerations, frankly, workers' compensation, which I'm sure you're familiar with. These are policies to provide coverage for people that are injured working on the job. I do have some bullet points on here about why it's important to make sure that your contractors have proper coverage. I do think this is important, regardless of what type of institution you have. I have a lot of claims experience in this area. The world of preservation it's very common that volunteer-run organizations mostly don't have the best risk controls when it comes to doing the repairs on their building. Meaning, you've raised some money, you have $10,000 to spare, and you're going to get some electrical, things repaired within your building. So you go out and you hire an electrician, and you get a couple bids, and you go with the lowest bid, of course, because you're a nonprofit or you're, a grassroots organization. You don't have money to throw around. So you hire an electrician. You don't do any due diligence to make sure that that electrician has proper insurance, and something bad happens. The electrician is hurt. He electrocutes himself at your property, or he burns down your building. Anytime you're working with a third party, and we're going to talk about contractual risk transfer in a second, because I do think it's really important. But anytime you're working with a third party, you could find yourself in a position where you're picking up their damages. And in the context of workers' compensation, any contractor that you have working on your site and they don't have workers' compensation, meaning if they get hurt on your property, your insurance, either your workers' compensation insurance or your general liability insurance, is likely going to be the deep pocket that helps this person. So we're going to dive into this a little bit more in a second. But there's another type of workers' compensation. It's called volunteer accident. Volunteer accident is essentially workers' compensation for volunteer-run organizations. To have coverage for workers' compensation in most states, you've got to be a W-2'd employee, meaning you've got to have, it's meant for employee injury on the job. But, most preservation organizations, most small ones at least, have volunteer labor, volunteer boards, volunteers that are doing the work. They're helping clean up a historic site. They're helping do some light demolition on a building. They're doing, things to help the nonprofit, to help push forward the mission of preservation. If one of those volunteers is hurt, having a volunteer accident policy is important. And then there's other types of insurance which really aren't applicable in our world, but they, I guess technically they're applicable to a certain extent. Auto insurance, of course. Rarely do we find organizations that have a fleet of trucks, but occasionally it happens. Cyber liability is important. Fiduciary liability is important, but they're not as important as the topics we just talked about. Sorry. Most commonly, I'm just going to touch on this briefly. People ask their insurance agent, I know I get asked the question quite a bit, is, well, what limits should we be carrying when it comes to liability? And the answer is, I don't know. And no insurance agent knows, because no insurance agent has a crystal ball, and no insurance agent can tell you what could happen, what type of lawsuit could happen. But I can tell you what's kind of standard, right? So a general liability policy, you'll find a standard limit is $1 million per occurrence and $2 million in aggregate. That's what you're probably going to find almost exclusively across the board. Umbrella limits, as I said, are an extension of your general liability. Most small historical societies, preservation organizations don't buy an umbrella policy for financial reasons. But if you're doing some innovative things, renovation of buildings, or doing some operationally, you've got a pretty busy organization, you might want to consider it. The limits are available from $1 million all the way up to $100 million, but most commonly it's $1 million or $2 million. As far as directors and officers, again, most small organizations are going to have $1 million limit to protect their board. Larger organizations should consider higher limits. But again, if I'm feeling out the group that I'm talking to right now, most commonly you're going to find yourself in the $1 million range. And then workers' compensation is unlimited, meaning there is no limit. The state of Colorado sets the benefits. You could have an employee that's injured and they could be on workers' compensation for the rest of their life, and it could cost a lot of money. Legal defense is also important to point out when you're considering your limits. When you get sued, of course, legal defense is the big portion of it. General liability, typically legal defense, is unlimited and outside the limit, meaning it doesn't take away your $1 million limit. Umbrella is the same. And then directors and officers, it's either inside the limit, meaning it's part of your limit, or it's outside of the limit, meaning it's unlimited. Okay, I'm going to skip the liability claim scenarios because I want to save time for any questions that you have, but we could always go back to it. Okay, we talked about insurance, right? That's the act of you transferring your risk to another entity. You know, Travelers, Hartford, Chubb, another insurance company. You've purchased via a premium the ability to, if something bad is to happen to your building, your collection, you get caught up in a lawsuit, you transfer that risk to a third party, being the insurance company. But what happens if what happened wasn't your fault, wasn't your organization's fault? It was the fault of a third party. It was the fault of a contractor or a vendor. Why should your organization be on the hook? It brings up the concept of contractual risk transfer, which is transferring your risk to that of a third party. I gave the example earlier of an electrician, right? You hire an electrician to come and do some work, and you know, you made a bad decision. You hired a bad electrician, and that electrician burnt down your building. He crossed some wires and sparks flew and fire happened in the middle of the night. Sure, you've got property insurance. Of course you've got property insurance, but why should your property insurance pay? Why should you have to pay your deductible? Why should your premium change? Or, you know, it should be the electrician's insurance. You know, they're the one that is at fault. So the concept of contractual risk transfer is making sure that the responsible party is the one that takes care of it. And you do this through what we call the three-legged stool of risk management, which is kind of hokey, but hopefully this helps paint the picture. The first leg of the stool is having a contract with the third party. You have a legal contract. It's got an indemnification clause. It's a legal agreement that they're going to hold you harmless for their actions. Okay, but most, you know, contractors might agree via contract to hold you harmless and make you whole, but they don't have the assets to back it up. They don't have the money. So that's why they buy insurance. So you collect a proof of insurance, right? You've gotten a certificate that says this contractor's got insurance. Good. So now you've got a contract. You've got proof of insurance. Excellent. But what you need to also have is, within that certificate of insurance that you've collected, names your organization as an additional insured. So they're protected by your insurance. And if you have those three things, a contract, insurance requirements within the contract, and you collect proof of insurance, you now have the comfort to know that your contractors or vendors are properly insured. This is just summarizing what I just said. And also, I emailed this to Todd, by the way, this presentation. Todd, you could feel free to send it out to the group because I know I'm skimming through a lot of important topics.
I will do so. Thanks.
Yes, great. So the, you know, one question we often get asked is, within that contract, what type of limits should you be requiring of your contractors? And I can certainly help with this. On the screen is just a very small sample. You know, generally speaking, think $1 million. That's typically the bar minimum. $1 million you want to require contractors and vendors to have for general liability, auto liability if they're involved in any kind of autos. Workers' compensation, again, is unlimited, but you want to make sure they have workers' compensation. And then as far as umbrella liability, if you have contractors that are doing some really kind of crazy things, you know, fixing the foundation of your building or messing with load-bearing walls, you might want to make sure that they have limits that are higher than normal. And you would do this through an umbrella policy. You would require them to have $1 million umbrella policy or a $4 million umbrella policy. And your insurance agent should be able to help you with that. Also, within the insurance requirements in the contract are some other provisions that you'd want to consider. And I'm not going to go through these because of time, each one, but you want to make sure that the contractor is insured with a proper insurance company, you know, highly rated carrier. You want to make sure the carriers, the contractors policy is primary to your policy. You want to make sure they require you to send a notice of cancellation, meaning, you know, if their insurance is canceled because they forget to pay the bill, you should be made aware of that. There's a bunch of other stuff, but again, I'm keeping my eye on the clock here. I do want to take a moment to go through a certificate of insurance, because oftentimes people are used to collecting a certificate of insurance, but they don't know what they're looking at. Your insurance agent knows what he's looking at, but you might not know. So this is the sample certificate of insurance. This is the top, this is the bottom. I couldn't fit it all on one page, but you'll see kind of arrows pointing to it. Where it says vendor's name or contractor's name, that's the entity you've contracted with, right? So if you've hired ABC Electric to do your electric work, you'd want to make sure that's what it says right there, ABC Electric, right? Vendor's name. You have the insurance company that's listed. There's an area that says additional insured. When it's marked with an X, you want to make sure that's shown. You have the policy number, the term, you know, the policy term and the limits. All of these are important, and I'll tell you why it's important to collect a certificate of insurance. And I have a claim going actually right now because of this. I had a client in Oklahoma City that hired a contractor to do some historic tax credit renovation to a building. And, you know, they hired the contractor did the work, building's open. 2 years later, the client gets sued because someone actually got hurt on the property. And now we need to go back and file a claim under that contractor's insurance. But the contractor has gone out of business. So he can't get a hold of the contractor. He's got this lawsuit he needs to respond to. So what he did was he dug out the old certificate of insurance that he collected 2 years prior, and he called the insurance company, because right here on the document you can see the insurance company is listed, and he said, hey, one of your contractors provided me the certificate 2 years ago, caught up in a lawsuit. He filed the lawsuit with the contractor's insurance carrier, and now he's protected. So it's important to collect proof of insurance, and it's important to keep it, particularly when working with contractors. All right, I'm going to skip that as well. And I apologize for going through so quickly. It's 3:45. I believe you wanted to keep it to an hour. I certainly could do this. I could do this all day, but understanding people's times, I wanted to allow some time for any specific questions you have. So go ahead.
Great, Kevin.
Fire away.
Sounds good. Why don't we, if you want to keep it on that screen, that's fine. Or if we want to have everybody look like we're on the Brady Bunch, we can do that too. We can make you smaller too.
I'll go back and forth. How about that?
I know that there was a few questions. At least there was one question from Tawny about fine arts coverage under a university. And do we need to call out valued items separately in an insurance policy? So I don't know if I can, if you can address that question, and maybe Tawny, if you're on here, if you'd like to ask that question again, or those two questions, that would be great.
No, I understand. I do understand. Did Todd explain it properly, Tawny? Is that right? That's your question?
Oh, I think you mentioned maybe calling out higher dollar items. Like, so our collections, there's a fine art, you know, sort of sub collection, and then we have a lot of historical objects. But the fine arts collection, I'm guessing, it sounds like maybe we should call out certain items that are especially valuable and list those, like, let's say bronzes, for example, or paintings. But then we have other things that maybe are less of value or difficult to determine, that are historical objects. They're very valuable to us, but they may not have, you know, we have thousands of arrowheads, for example, and to try to put a value on that is very challenging, especially when many are not identified.
Yeah, no, I understand the question. So I'm going to answer it in the context of the claim, right? So you've got this large collection at your facility, and some of them are high value items and some of them are not. And you come to work one morning and the whole building is burnt down, right? So your insurance carrier, your fine arts carrier in this context is going to say, okay, hey, you bought a policy through us, let's get you paid. What do you have? And you'll say, whatever you're going to say, right? So you could either say, I've got this very detailed list of every item and it's spelled out exactly what it is. It can run both ends of the spectrum. Now, you might not find it practical to schedule every single arrowhead and, antique pencil or whatever, but the items that you're gonna wanna make sure are addressed are the ones that are most valuable, period. Most valuable to you or most valuable from a dollar perspective. So most organizations that I work with that do have large collections, they have thousands of items and documents and artifacts and just, random things. They don't have the manpower or the dollars, frankly, to schedule every single small thing. They try to pick out the, whatever it is. It could be 10 or 100 or even 1,000 things that are most important and then document. Because again, you came to work that morning and the building was burnt down. So how's the insurance company going to know what you had? How are you going to know what you had? So you have to kind of document all these things before the claim so that it makes the actual claim itself easier. Because if you can produce, this is best case scenario, if you can produce a document or proof that these are the 3,000 items we had individually listed that says exactly what it is, so that the insurance company, and they're experts in this area as well, can say, all right, well, what is an arrowhead worth, right? They're going to help try to establish a dollar, a value to it. So again, I would just go into documentation. And then, for the more expensive ones, I do recommend you be sure to document and then perhaps file a schedule with the insurance company. Say, here are 10 most valuable items. And then depending on how valuable they truly are, I mean, are we talking $1,000 or are we talking $30,000 or more, you may want to consider getting an appraisal, which will substantiate that value. So hopefully that helps.
So would that increase the university's premium then?
No, not, I mean, maybe, it depends on, that's kind of a relative question because it depends on what they had it insured for and then what you end up scheduling it for. I'll give you there's another great example, okay? I've got a house museum in Fort Lauderdale, Florida, and they've been a client of ours for a long time. And the executive director calls me 2 weeks ago, and he said that, that painting that we have insured for $100,000? And I looked at his fine art schedule. Yeah, it's insured with Markel, an insurance company, for $100,000. He said, we just got an appraisal, and Christie says they can sell the thing for $2.5 million. So they were totally wrong on the value. But so, yeah, if we now went back to the insurance company and said, hey, we want to get this thing insured for $2.5 million as opposed to the $100,000 it was insured for, then yeah, it would increase the premium. It's not as much as you might think it is actually, but it would increase the premium. But at the end of the day, if you have some items that are valuable to you, you don't want to be kind of nickeled and dimed at the time of the claim. You want to know going in what it's worth, what you think it's worth, and then have an agreement with the insurance carrier that you've gone on record to say, we're insuring this thing for $5,000 because we think it's worth $5,000. You're paying a premium based upon it being worth $5,000. So then, once the damage happens, you've kind of got a paper trail to say, we thought all along it was worth 5,000. We told you we thought it was worth 5,000. We insured it for 5,000. We'd like 5,000. So anyway.
Thank you.
Kevin, I might just sort of say, so we have a lot of course, artifacts in our repositories, and oftentimes it's really difficult to assess the values, which is why the state has a kind of a policy of not only looking at sort of the fair market value, but also kind of a replacement value with it, which can be agreed upon mutually between the repository and the insurance entity, as well as the state. So, and all those can get together to determine that. And if it's needed, then other experts can be brought in to determine that value. And it's always done after a claim, I mean, or after that damage has occurred. So most of these institutions have just a pure wall-to-wall coverage. So maybe you can talk about that a little bit, about, you know, just having a basic generic wall-to-wall coverage and how that works.
Yeah, that's a good question. So I think a lot of what I talked about was maybe the best way to go about doing it, but maybe it's not the most practical way. The most common way that organizations, and I'm thinking mostly on the small, you know, medium-sized organizations, you know, they might not know what they have. They know they have a lot of stuff, but they don't know what they have. So the most common thing is people buy, Todd used the phrase wall-to-wall coverage, but really what we're talking about is kind of a blanket policy that says, hey, Kevin, give us a quote for 100,000, 250,000, and $500,000. And I'll say, okay. So I'll go and I'll give them quotes, and then they'll figure, oh, we can afford 250,000. So they don't necessarily know that their collection is worth 250,000. They just know they need to insure it for something. And 250,000 is a premium that makes the most sense. You buy that policy, and it'll provide coverage for anything that happens within your collection up to that limit, 250,000. That's kind of the most, I don't know if that specifically answers your question, Todd, but that's the most common way it's handled. And there's a lot of insurance carriers out there that'll give you kind of those base limit policies. Again, the phrase, the term wall-to-wall, I'm going to share my screen again for a second, because the term wall-to-wall implies, there we go, share, where was that? Okay, remember when we talked about these sub-limits and different things to consider? Wall-to-wall coverage is anything that can happen at your facility, right? Something happens at your facility burns down or it's damaged within your facility, but what about outside your facility? It's in transit, it's being loaned to another institution, something's happening away. The most basic fine art policies don't provide coverage for things like this. So if you are loaning out your things, or you do have a risk of your items in transit or away from your premise, then you need to have that kind of thought process. So I think that's, yeah.
Great, thanks. Other questions? Feel free to put them in the chat, or we can just go ahead and take them as you have them. I also see that Lou has asked, is theft covered under property insurance? Can you address that, Kevin?
Yes. So when Lou says property insurance, I don't know if he's talking about building or contents or fine arts, but the answer is pretty much the same, which is theft is always covered. It's covered. So sometimes you have to be able to substantiate that it was a theft, though. Sure. So in property insurance, the burden of proof is on you, the insured. It's the same way in homeowners insurance and commercial property insurance, meaning if you owned a home and you had your home insured with State Farm and your home burnt down, right? The State Farm's going to pay you to fix your house. But you had things within your house, right? You had your clothing, your TVs, and such. It's a little known fact, but you need to be able to prove what was in your house. if you came to your State Farm agent and you said, hey, I had 4 Rolex watches under my bed and, you know, they got lost in the fire, you know, State Farm's not going to give you the money for 4 Rolex watches. You need to be able to prove to a certain extent that they were there, that they were yours, receipts, those type of things. And the same is true in the commercial world, meaning if you had a painting that was stolen, you have to be able to prove that the painting existed. You know, you can't just say, oh, I had this painting and it's gone, it got stolen. And the insurance carrier will be like, well, show us proof that you kind of had the painting before it disappeared. So there is a nuance to it. And I bring that up because there's a phrase called mysterious disappearance. And if you can't prove that the item existed to begin with, so thus you can't prove that it was stolen, then you could have a problem in your claim. But that's why I keep going back to documentation. You just document. It doesn't even have to be a fancy document. It could be an Excel spreadsheet. You're just kind of trying to show what you have, what exists. So you can kind of point to it and say, you know, see, we had it documented and now it's gone. You would have coverage.
Thank you.
We have just a couple more minutes, so if anybody would like to ask 1 or 2 quick questions, that would be great. Have we stumped everybody? Sure.
I probably went through it too fast and your probably heads are spinning, so I apologize. But, you know, as I said, we, you know, we're here at, you know, part of our mission, we are an insurance agency and we can help you with insurance, but I'll tell you, I feel just as many calls from people that are not clients. You know, it's kind of the mission that the National Trust put us under, is to basically help whoever needs it. So, you know, feel free to reach out if you have any questions at all. You know, as Todd, I told Todd if he could share the slides, you can look at them a little slower than I went through them. And if anything pops out, just feel free to reach out and I'd be glad to help.
Great. Look, I got a couple questions. How does the state repository, would we have assistance with historical artifact valuations in the event of a claim? Potentially, although it's really good to know what you have. So I would encourage you, I think as Kevin sort of said, if you've got a good inventory, that would help a lot, at least as a starting point. So hopefully that helps you. And let's see, someone else said thank you. I know it's 2 o'clock.
Yeah, and just real quickly on that, I won't be long, but that is a good question because when the unique artifact is damaged and broken or stolen or whatever, you know, how does everybody come to the conclusion as to what it's worth? And that is a complex undertaking. You know, again, you go to the Antique Roadshow and you get surprised by the value of these different things, but that's why you document on the front end, is so you can kind of try to substantiate a value. But anyway.
Well, I don't want to take up anybody else's time. I thank you all for joining us. I know we could have done this for a lot longer, and apologize for all the technical issues we've had. And I'll send out to everyone Kevin's slides and his contact information, and feel free to reach out to him or to myself. And I hope you have a great rest of your day, and we'll look forward to seeing you at the next Confab. So thanks very much, everybody.
Thank you. Bye.
Thank you.